the 1 minute chart here in the ES. Looks like here in the first couple minutes, looks like the market does want to go up a little bit, which is kind of what I was thinking this morning when I first started the call here. ES and NQ yesterday was a very, very strong day in the market, right? And a big up day, and we finished on the high. And a lot of times when you finish on a high like that, you know, there's going to be some follow through. There's going to be some continuation, right? Because at no point yesterday did the market ever look like, hey, it's ready to take a breather or roll back over or anything like that. So yeah, we're going to probably have another up day today. Not a day like yesterday. You're not going to have a gigantic up day, but it looked like the market did want to go up a little bit more before it finally peters out here a little bit. And we'll see, you know, what happens later in the afternoon. I imagine as we get closer to the close today, trading volume will probably lighten up a little bit, I imagine, ahead of NVIDIA's earnings. Because NVIDIA, if it makes a big move, NVIDIA will really move the ES and the NQ. So pay attention, especially to the NASDAQ. Pay attention to NQ right after the bell today. If NQ, you know, is up a couple hundred points or down a couple hundred points right after the bell, you'll know whether NVIDIA had good or bad earnings or not. Let's take a look at Yvonne's 325 covered call in Tesla. I don't have a Tesla position. Let's see. Tesla is essentially unchanged today. Oh, so you've got a really deep call. I would also say Tesla still well off its highs. I wouldn't bet that this thing is going to come back down to your call. So if you've got shares and you've got the 325 covered call, at some point, if it's already profitable, I'd just close it. There's no reason holding on to it. It's going to be so deep in the money at this point. You've got your win essentially locked in. Just take the win. I know you're probably thinking, well, I'd love for it to come back down and, you know, the call finish out of the money. I get to keep the call premium. I get to keep my shares. But you got to understand, when you put on the covered call, you wanted this to happen, right? You wanted Tesla to go up in a big way. It did. You're essentially, you know, you're not at max profit. You'd have to wait till expiration to get max profit, but you've made a nice little profit on it. You really kind of have to just take it. I don't think you could roll. You didn't mention what expiration you were in, but I would seriously doubt you could roll for a credit. You're in the July expiration. Oh, well, if you got that much time, yeah, I would definitely close. I wouldn't want to hold on to this for the next 51 days because it could come back to you. Like you know, it could drop below 325. You know, this win that you've got here could completely reverse on you in 51 days. That's so much time still left on that covered call. A lot of times when I do covered calls, I tend to make them shorter trades. But there's nothing wrong with putting it on with more time. For me, I like putting them on with like 3 weeks, you know, to go 21 DTE and just hold the expiration. But with 2 months worth of time, especially in a very volatile stock like Tesla, there's no telling where this thing could be trading in 2 months. So yeah, if you've already got a win, I would just take it. There's no reason to play around in this thing. If you're still, I imagine you're asking the question because you still want to be bullish and profit from the upside. Go ahead and take this win and then put on a new trade. You know, lock in this win, use whatever profit you made from this trade to pay for the next trade. You know, that way, if the next trade doesn't go your way, well, you can think of it as practically a free trade if you paid for it from the wins on this one. It's just too much risk with a covered call to hold on to it, especially on a stock like Tesla that's very volatile. Because obviously it's undefined risk to the downside on a cover call because of those long shares. So yeah, on any kind of strategy that involves undefined risk, yeah, if you go ahead and get a pretty nice profit quickly, yeah, just take it. Only bad things can happen from holding on. I know a lot of times people will say, like, holding their cash secured puts, their short puts, and they make 50% profit in like 1 day, and it's a 2-month trade, like a 60 DTE trade. But for whatever reason, the stock makes a huge move right away after they put on the trade. Well, I already made 50%, but I can just hold on for the next 59 days and try to get the other 50%. Yeah, that's not really worth it. Even if you were to hold on all the way to expiration to collect that 100% profit, was that worth it? You made 50% in 1 day, and then you made the other 50% in 2 months and another 2 months. Like, one of these is not like the other. You know, take the quick profits, you know, the profit that you can just lock in right away. And then if you're still kind of like what I was just saying in Tesla, if you're still bullish, sell the next put, but go ahead and take that put off, you know, the one you just sold. Well, let's take a quick look at my positions real quick, just to see if there's anything I need to do. I doubt there is. We'll start at the bottom today. UNG, Natty Gas, is down 2%. That's going to hurt these puts a little bit, but it hurt them just a little bit. They're still well out of the money. Nothing to do here. So let's just move on from that. United Airlines got a short put. United Airlines is up 18 cents. An up day should be good for a put. It is fine. We're not near 50% max profit yet, so nothing to do there. Let's go to the Qs. Put credit spread. We put these on at 60 DTE. We take them off at 21 DTE. So this one, we've been in for 30 days. It's not at 50% max profit yet. It's only at 22% max profit. But we'll probably get there, you know, if the market has another couple of nice up days, we'll get to 50% rather quickly. This is going to be one of those trades that I was just talking about, you know, a 60 DTE trade that potentially we could be in and out of within 2 weeks, you know. But right now, yeah, everything's going good with that trade. Palantir got a short put. Palantir is up. We're not near 50% max profit yet, so just let it keep working. MU got a short put. And we got an up day, very small up day, essentially unchanged, but we're fine. We got 28 days until earnings in MU, so we've got 4 more weeks before earnings. Got a lot of time left on this trade, 51 DTE. Just let it keep going. Jets, 3 long calls. These are at the money calls. Haven't done anything yet. I've been in this trade for 16 days. Wow. And Jets, well, I mean, it's had a range, but it's had a range where it still ended up, we're still essentially at the money. I need it to go up at least $1 to profit, because I don't need it to trade above 23. I need it to trade above 23.67, because that's what I paid for a debit, right? I've got to overcome the cost of the debit before I can profit. So at 23.67, that's when this trade becomes profitable. We're not quite there yet. iBit, Strangle, 2 puts versus 1 call. iBit's down today, down about 1.25%. I've got positive deltas on this Strangle, so you would think a down day would hurt me. It didn't really hurt me, probably because volatility is also coming in a little bit. One thing to note with volatility, when the stock market is up, stock market on up days, volatility tends to come down, right? Because that's what everybody wants. They want the market to go up. Now, when the market goes down, volatility tends to go higher, right? Because that's bad, right? That's when people get fearful. On things that are not equity, like indexes, like the SPY and QQQ, things like that. On commodity products, on things like natty gas, gold, crude oil, Bitcoin, a lot of times when you get down moves in those kinds of things, volatility will come in. It's kind of almost kind of like the reverse, what goes on in things like the ES and the NQ. So even though we're having a down day, might have some volatility coming in. Might be why I'm not really losing any money on this position today. So let's take a quick look at NVDA. I'm coming into the day using plenty of buying power, as far as I'm already just under 50% buying power being used, so I don't necessarily need a trade. What I would like to do, just on directional assumption on NVIDIA, I don't expect NVIDIA to make a gigantic move. And NVIDIA is the kind of company I would love to just go sell a Strangle. Go sell that 12 Delta put at the 51-day cycle. Maybe sell, we'll give ourselves a little more room to the upside, 9 Delta call, right? And receive 250 credit, buying power reduction of $2,700. It's typically kind of what I'd like to do. IV rank's kind of low though, right? Because for a Strangle, any Delta neutral trade like a Strangle or an Iron Condor, you're not going to profit from Delta, right? You're not really going to profit from Theta either on an earnings trade. It's only 1 day, right? It's not enough time it's going to pass. How do you profit on an earnings trade, on a Delta neutral trade like a Strangle or an Iron Condor? Well, you profit from Vega, from volatility coming in, but Not a lot of volatility baked into NVIDIA right now. It's very rare you see something reporting earnings, especially a tech stock, that has an IV rank of only 27. A lot of times you would expect that IV rank to be 40, 50, 60, 70, 80 even. You know, this is kind of low. So that kind of bothers me, selling a strangle on something with an IV rank that low. Now, I've mentioned this before, when it comes to low IV, typically directional trades are where you want to be. And that way you can profit from delta. You give yourself another way to profit. So this might be one where I just sell the put side. Forget about the call entirely. Sell the put. It'll be out of the money put. So even if you get a down move, you got some protection. But if you get the up move, you know, you get your quick little win. So it's probably what I would do if I want to sell options. Go to the 51-day cycle, sell a put. Put, you get here, well, this is the 12 delta, and you can sell, you know, a different strike, but a 12 delta, rather safe, right? You're going to win probably 90% of the time on this thing. Well, we can actually check it out. Pop, 86%. Yeah, if you take 50% max profit, you're going to win more than 90%. You get 157 credit, buying power reduction, $2,200. It's kind of high buying power reduction. NVIDIA, the buying power reduction on it, for whatever reason, is a little on the high side. But if you're okay with the buying power reduction, the risk versus reward here, it's probably how I would play it.